How can a single, all-or-nothing bet completely reshape a company? Well, today we're going to dive into the incredible story of how one company's massive gamble back in 2018 paved the way for something totally different, and you could argue much, much stronger today. It all kicked off with this quote right here from an online investment forum back in 2018. And it just perfectly captures the buzz, the excitement around what felt like a truly unique opportunity. Investors thought, wow, here's a rare chance to bet directly on a massive movie. And that, right there, is the heart of our story. You had this small-cap company, not really a household name, that decided to stake its entire future on the success of one gigantic film. It was the classic high-risk, high-reward play. So here's how we're going to unpack this whole thing. First, we'll rewind the clock to that blockbuster bet in 2018. Then we'll hit fast forward and see what the company looks like today. After that, we'll get into the nitty-gritty of their pivot from films to streaming, look at the real power of their music business, and finally zoom out for the bigger picture. Okay, let's set the scene. We're back in 2018. This company was at a crossroads, a real make-or-break moment, and it all boiled down to just one project. So the company was Tips Industries. And get this, its entire market cap was just 164 crore rupees. Tiny, right? But the bet, the asset they were banking on, was the movie Race 3, a massive Bollywood production, starring one of India's absolute biggest stars, Salman Khan. I mean, the potential value of this one film just dwarfed the entire company. And this table just lays it all out. You can see why investors were so hyped. Look at these numbers. Even the minimum potential earnings were projected at over 550 crore rupees. That's more than 3 times the company's value at the time. If this film was a hit, the potential returns were just astronomical. But, and there's always a but, right? The risks were huge. That original forum post was really clear about it. This was a short-term thing. There was no real pipeline of other big movies coming after Race 3. The stock was thinly traded, so it was kind of hard to get in or out. And the big one, everything, and I mean everything, hinged on the movie being a success. If it flopped, the whole bet was off. So what happened? Did the bet pay off? Did they hit the jackpot? Well, let's jump forward to today, because the answer is probably not what you're expecting. The company has gone through a truly shocking transformation. The very first clue is right here in this official filing. The company isn't even called Tips Industries anymore. Nope. It's now Tips Music Limited. That name change is a massive, blinking sign that something fundamental has shifted in their strategy. And man, what a difference. Forget that single film lottery ticket. Today, the company is debt-free with a huge pile of cash. The vast majority of its money, 71%, comes from digital platforms. It's got a colossal YouTube presence, a deep catalog of over 34,000 songs. It's not a film company anymore. It's a pure-play music company. So the big question is, how did this happen? How did they go from a high-stakes film producer to this stable digital music powerhouse? Let's break down the pivot. This slide basically explains everything. Their old business, film production, is what you'd call an event-driven model. You spend a ton of money up front and just hope for a big hit. It's lumpy, it's unpredictable. Their new model, making money from a music catalog, is the complete opposite. Revenue from streaming is stable, it's recurring, and it comes from a massive library of songs just being played over and over and over again. And you know what? They made this pivot at the absolute perfect time. Just look at this chart showing the explosion in digital advertising in India. Now, why does that matter? Because that's the money that funds streaming platforms like YouTube and Spotify, which then pay Tips Music every single time one of their songs gets played. They are riding a massive tailwind here. Okay, so let's follow the money and see just how successful this transformation has been in real, concrete numbers. First thing to know, the entire Indian music industry is on a tear. As you can see, the whole market is projected to grow like crazy over the next few years. You know the saying, a rising tide lifts all boats? But here's the kicker. Tips isn't just riding that wave. They're on a speedboat. Their revenue growth is actually accelerating even faster than the overall market. So this tells you their strategy isn't just about being in the right place at the right time, it's about executing incredibly well. And when you look at the global picture, this chart makes it crystal clear. Streaming is king. I mean, over half of all music revenue comes from subscription services, and then you add another 18% from ad-supported streams. The old way of doing things, like selling CDs, that's just a tiny sliver of the pie now. And Taps is sitting right in the middle of this new world. That massive catalog of 34,000 songs, that's the fuel that powers these global giants, from YouTube to Spotify and all the rest. Every single stream, every play, generates a tiny but very steady stream of cash. And believe it or not, the growth story is far from over. The company is already looking at what's next. Things like making more money from short-form video, collecting more royalties when their music is played in public, and even licensing their library to train AI models. On top of all that, the number of paying subscribers in India is expected to more than double.
All right, so let's zoom out. What's the big lesson here? What can we take away from this incredible corporate transformation?
Well, the big shift is this. They went from an unpredictable hit-or-miss business to a stable, recurring revenue model. They stopped betting on one-off blockbusters and started monetizing a deep library of assets, bit by bit, millions of times every single day. And honestly, that's why this story matters so much. It is a perfect case study of how value is created in this digital age. It's all about recognizing the power of a library, the stability of recurring revenue, and being smart enough to adapt your entire business to grab hold of those opportunities. So it leaves us with one final, pretty interesting question to chew on. For decades, we thought value was all about creating the next big hit, the next blockbuster. But in a world of endless digital streams, maybe the real power and the real value is actually in owning the library.